Hello again, everybody. This is Matador from freetradingvideos.com. It's 12:20 p.m. Eastern Standard Time on July 2nd. Happy Friday to you. The SPY, the ETF for the S&P 500 exchange, is selling off nicely. Lower highs, lower lows. We had a bit of a fight here between 102.60 and 103. Ultimately, this lower swing high gave way to equal swing lows and then a nice break at the 102.50 area. So good rundown. It's still not quite where we were yesterday. If you look at this on a 60-minute chart, zoom in, you can see where we are. 15-minute chart also shows it nicely. Let me just zoom in again. And so this is what we're fighting through now, about a 50% retrace of the last run-up as we hit our head on the declining 200 MA. So again, great to watch out for these round numbers like 102, trying to put in a lower, higher swing low through here from yesterday, but running up into some trouble overhead at 102.50. The market internals, let me grab these. 1.64 is nicely and solidly bearish, typically for the trend, and the trend Q 1.02 very nicely in the consolidation area, and look at this symmetrical triangle forming. So this is definitely something to note. Typically we'll get a pop one way or the other out of this, and what I'm looking for is VIX confirmation as we hold up beautifully at support. I had wanted to see this break the lows before I got too interested in going short or long the market, and this is a perfect hold up on the 200 MA. So I need to be careful with this 15-minute chart. On a 60-minute chart, we also have a good bit of support below 30 in the form of a 200 MA. And so these will be some of the areas we watch out for if we do head south and look bullish. If we are going to be bearish and looking for a break, I will want this to go into this gap zone at 33 and start heading higher. So good stuff. That's why I see good market internal confirmation, not like we had yesterday. So definitely not a good time to go short the market after a multi-bar sell-off like this, especially on a daily chart. Typically, it's a huge multi-bar sell-off with even an unfilled gap here. And need to be very, very careful how you tread short into the markets into something like this. Doesn't mean it can't head lower or consolidate and then break. It just means I'm going to be a little bit more careful about how I enter long. And especially careful how you go long also, because anything that looks this weak is weak for a reason. So where there's smoke, there's fire, a great quote. And just take that with a grain of salt. So wait for good setups on the relative strength and weakness stocks like always, and use these videos and the broad market just as a great reference, as a jumping off point, so you can better visualize support and resistance. So good stuff. Well, I wish all of you the best 4th of July weekend ever, and it's great working with you this week. And I know D7's chomping at the bit to do his weekly wrap-up, and he's also doing the V newsletter this afternoon and this evening. So stay tuned for that. Take care and have a great long weekend. Bye, everybody.